Americans may soon feel the effects of President Trump's executive actions, and they could impact the type of car people choose to drive. One of the orders will eliminate what Trump calls an electric vehicle mandate and could also end subsidies for EVs.
You've got companies like NIO, companies like Lishan, these Chinese NEV makers that are frankly as good, if not better than Tesla right now.
I know people will say Americans won't buy Chinese. You know what? You ask somebody, do you want to pay $9,000 for an SUV or do you want to pay $19,000 or $20,000 for an SUV? No contest.
And this, causing some concern to the likes of Elon Musk and Tesla.
When I asked for these tariffs, in fact, I was surprised when they were announced. Tesla competes quite well in the market in China with no tariffs and no differential support. In general, I'm in favor of no tariffs. I'm also actually in favor of no tax incentives.
Tesla just hit a massive roadblock in its second largest market, and the numbers are brutal, with 1.2 million Teslas sold in China in the last 3 years, contributing to over 25% of the company's global revenue. Elon Musk was betting big on China to drive Tesla's future. But China just played its trump card, retaliatory tariffs on US electric vehicles, making Teslas tens of thousands of dollars more expensive overnight. Tesla stock is already wobbling, and now the company is at serious risk of losing its foothold in the world's biggest EV market. Is this the beginning of Tesla's downfall?
Very interesting. I saw a tweet just came in from Elon Musk, who's using our wonderful space facilities and did a great job 3 weeks ago. He said, for example, an American car going to China pays 25% import duty. But a Chinese car coming to the United States only pays 2.5%, a tenfold difference. So an American car going to China, think of that, pays 25% import duty.
Tesla's dominance in China has always been a key part of Elon Musk's global strategy. The Shanghai Gigafactory has pumped out millions of vehicles, helping Tesla stay ahead of its competition, but this latest move from China could send all of that crashing down.
Tesla chief executive Elon Musk is attempting to expand his business in China. His relationship with Donald Trump is in the spotlight as the US president-elect vows to implement tariffs on China.
A giant gigafactory on the edge of Shanghai, Tesla's home in China. More than half of all the company's electric vehicles in the world are made here, 1 million a year.
You can't overstate how important China is to Elon Musk. This is Tesla's largest factory outside the United States. So not only does Musk have business clout in this country, but political capital as well.
With these new tariffs, Tesla's imported models just became significantly more expensive, and that could push Chinese buyers toward local EV brands. And here's where it gets even crazier. China isn't just making Teslas more expensive, they're actively making it easier for their own companies to take Tesla's market share.
So you have written that Elon Musk's Tesla could lose billions of dollars in clean air credits because of Trump's environmental policy. Does that mean electric cars will get more expensive? And sort of on the political spectrum here, what does that mean for Trump and Musk's relationship?
China is home to some of the world's most aggressive and innovative EV manufacturers, companies like BYD, NIO, and XPeng. And while Tesla has enjoyed strong sales in China, these homegrown brands have been creeping up fast. With China's new tariffs making Teslas more expensive, these local automakers are poised to sweep in and snatch up Tesla's customers. But that's just the beginning. China's government has been heavily subsidizing its own EV industry for years, giving local companies access to billions of dollars in funding and incentives. That means Tesla isn't just competing with other automakers, it's competing with an entire government-backed industry designed to replace it.
When I asked for these tariffs, in fact, I was surprised when they were announced. Tesla competes quite well in the market in China with no tariffs and no differential support. In general, I'm in favor of no tariffs. I'm also actually in favor of no tax incentives for EVs, but provided that there are also the tax incentives for oil and gas must also be eliminated. So I'm in favor of no tariffs and no incentives for electric vehicles or for oil and gas.
But what happens next is truly insane. China isn't stopping at tariffs. They're also tightening regulations on foreign companies operating within their borders. And Tesla is right in the crosshairs. China has already started pushing new policies that could make it harder for Tesla to operate smoothly in the country.
Our car over there, pay 25%. They send their car over here, 2.5%. 10 points, that's from Elon, but everybody knows it. They've known it for years, they never did anything about it. It's got to change. We're going to be doing a reciprocal tax program at some point, so that if China's going to charge us 25%, or if India's going to charge us 75%, and we charge them nothing, if they're at 50, or they're at 75, or they're at 25, we're going to be at those same numbers. It's called reciprocal, it's a mirror tax. So they charge us 50, we charge them 50. Right now, they'll charge us 50, we charge them nothing. Doesn't work.
If Musk doesn't find a way to navigate these new restrictions, Tesla could see its operations slowed, its supply chains disrupted, and its sales numbers plummet. And just when you thought it couldn't get worse, there's another major problem: Tesla's reliance on Chinese suppliers. Tesla has been dependent on China for key materials like lithium, cobalt, and nickel, essential components for EV batteries. The company has spent years building relationships with Chinese suppliers to secure these materials at competitive prices. But now, those same suppliers are facing new pressure to prioritize domestic companies over Tesla. That means Tesla could soon be paying more for materials, experiencing production slowdowns, or even losing access to certain suppliers entirely.
Well, it could well be. And again, the big picture here, Tesla has just posted a dramatic $25 billion quarter, the biggest in their history, $97 billion for the year. They sold 1.8 million cars, and they have an astonishing 50% control of the American marketplace, more than all other EV sellers combined. But as you point out, Tesla's growth has slowed, 71% in 2021, 51% in 22. This last year, down to 19%. At the same time, BYD's come up like a rocket, selling 70% growth. They did 1.6 million vehicles next year. They're clearly going to pass Tesla this year.
And the reason why will shock you. China isn't just looking to hurt Tesla, it's playing the long game to dominate the entire global EV market.
China appears to view Tesla cars with some suspicion. Last year, Reuters reported that the vehicles were banned from entering military complexes, out of concern their cameras could be used for spying. In recent weeks, the cars were also reportedly restricted in one city while President Xi Jinping was visiting. Tesla cars feature an array of cameras to help with parking and other tasks. Company founder Elon Musk has always denied that they could be used to spy in China or anywhere else. Tesla has said that all data generated by the cars in China will be stored in the country. China is one of its largest markets and a major production hub.
The country has been working for years to position itself as the world leader in electric vehicle production. By making life difficult for Tesla, they're clearing the path for their own companies to rise to the top. If Tesla stumbles, it's not just bad for Elon Musk, it could reshape the global auto industry for decades to come. But hold on, it gets even better. Tesla's biggest strength in China, its Shanghai Gigafactory, might not be enough to protect it. While the factory helps Tesla avoid some import tariffs, it doesn't shield the company from the broader trade war. If China wants to put even more pressure on Tesla, they could implement policies that specifically target foreign automakers, making it more expensive for Tesla to operate while giving local competitors an even bigger advantage.
Chang. He's now the second most important man in China after President Xi Jinping.
Well, you don't get anything done without building relationships in China. Musk was very astute at understanding that and making sure that he built relationships in the city that gave him the best possible position in opening the market.
A star is born, Elon.
Another man who understands relationships is Donald Trump. He's threatening a trade war with China. And his new best friend is Elon Musk. So Musk is courting Trump and China at the same time.
And you'll never guess how it ends. If Tesla loses its foothold in China, the consequences will be felt across the entire company. China isn't just any market, it's Tesla's second largest, and losing that revenue could send shockwaves through its stock price, investor confidence, and future expansion plans. Even worse, if Tesla's stock takes a major hit, it could affect the company's ability to fund future innovations, which has always been one of Musk's key strategies for staying ahead of the competition. But we need to talk about what happens next. Elon Musk isn't the kind of CEO to just sit back and let his company get crushed. He's already working behind the scenes to negotiate better terms with China, trying to find a way to reduce the damage from these tariffs.
Do you think that Musk has aligned his views on issues like Taiwan with that of the Chinese government?
If he had said anything else, he could be facing action against his Shanghai plants, and those are his production base. He's not going to, endanger that. So let us say he's playing both sides for his own advantage.
Tesla is also staring down a new threat. Chinese-made electric vehicles.
There's even speculation that Tesla could partner with a Chinese company to help navigate the political landscape more effectively. But whether that will be enough remains to be seen. And if you think that's bad, just wait. China's strategy isn't just about Tesla, it's about setting the stage for a much bigger global shift. The country has already been expanding its influence in EV markets outside of China, particularly in Europe and developing nations. If Tesla loses its dominant position in China, it could give Chinese EV manufacturers the momentum they need to start pushing Tesla out of other markets as well.
So Tesla, yes, really impacted the entire industry here, push people to develop and improve the quality, the design, especially the price.
The next US president hates losing and demands loyalty. Musk and Tesla may be left with a choice. Will it be Trump or China?
Because this changes everything. We're not just talking about Tesla's future in China, we're talking about the future of the entire electric vehicle industry. For years, Tesla has been seen as the leader in EV technology, but China's aggressive tactics are proving that the race for EV dominance is far from over. If Tesla can't adapt quickly, it risks falling behind permanently. And the craziest part, it's 100% real. This isn't just speculation, this is already happening. Chinese EV companies are ramping up production, Tesla is facing increasing pressure, and the trade war between the US and China is only making things worse. The next few months will be absolutely critical for Tesla. If they can't find a way to counter these challenges, the company could be looking at its most difficult period yet.
Liar. There's no measurement showing people getting rid of their car because they hate the guy who co-founded the company.
I for sure wanted to stay with electric, but I was not going to get another Tesla.
While EVs are selling faster in Colorado, up 20% from the previous year, Teslas are not.
As more and more cars come to market through the traditional manufacturers, Tesla's market share is declining rapidly.
Matthew Groves is the president of the Colorado Automobile Dealers Association. They use data from Experian Automotive to track these trends.
They were first to market, right?
He says Tesla's dominated the EV market in the state for years because they were first. In Q4, the rate of new Nissan electric registrations in Colorado.
But here's the most important part. This isn't just about Tesla or Elon Musk. This could affect global EV prices, job markets, and even the push toward clean energy. If China succeeds in dominating the EV industry, they'll have a massive influence over how the world transitions away from gasoline-powered cars. And that's a level of control that many countries, including the US, might not be comfortable with. Stick around, because this next part is huge.
Nor I asked for these tariffs. In fact, I was surprised when they were announced. Tesla competes quite well in the market in China with no tariffs and no differential support. In general, I'm in favor of no tariffs. I'm also actually in favor of no tax incentives for EVs, but provided that there are also the tax incentives for oil and gas must also be eliminated. So I'm in favor of no tariffs and no incentives for electric vehicles or for oil and gas.
If Musk wants to save Tesla's future in China, he's going to have to pull off one of the biggest strategic moves of his career. He needs to figure out how to operate within China's increasingly restrictive policies while also protecting Tesla's interests globally. Whether that means cutting new deals, forming partnerships, or even shifting parts of Tesla's supply chain outside of China, one thing is certain: Tesla cannot afford to lose this battle. Will Tesla find a way to survive and thrive? Or will this be the beginning of the end for its dominance in the EV industry?